85% of millionaires in the US weren't born into wealth. They built it from the ground up. So how do they do it? Do they know something most people don't? If you've been working hard for decades, yet still worry about your financial freedom in retirement, now is the time to re-examine your strategy. In this content, you'll discover 12 types of assets that the wealthy quietly use to preserve wealth, generate income, and protect their financial future. And most importantly, at the end, you'll uncover the most powerful yet invisible asset they rely on. Don't miss it. Asset 1, cash. It might sound surprising, but the most important asset you can own isn't real estate, stocks, or gold. It's cash. Yes, cash. Not because it's familiar or easy to hold, but because it gives you one thing nothing else can: the power to seize opportunity the moment it appears. Just look at giants like Apple, Microsoft, or Berkshire Hathaway. They're sitting on hundreds of billions in cash, not because they don't know how to invest, but because they understand one truth: the biggest opportunities come without warning, and only those with cash on hand are fast enough to grab them. But here's the paradox. If cash just sits there, it quietly loses value over time. The US dollar is shrinking in purchasing power every day due to inflation. For example, 50 years ago, $50,000 could buy you 2 houses. Today, it might not even cover a new car. Holding onto idle cash is like letting ice melt in the sun. It slowly disappears. So the real question isn't whether you have money, it's where you keep it. Many people still stash their cash in checking accounts or hide it in a safe at home, and that's like burning money without realizing it. Instead, consider moving it into high-yield savings accounts or money market accounts. These options help your money earn interest, at least enough to keep up with inflation. Cash isn't something to lock away. It's a strategic weapon. It gives you the edge to buy high-quality assets when the market dips, invest in a startup opportunity, or simply stay in control when unexpected financial situations hit. So if you're serious about building long-term wealth, start with managing your cash wisely. It's the first and most critical step in protecting your financial future. Asset 2, real estate. If there's one asset that generates steady income, appreciates over time, and comes with powerful tax advantages, it's real estate. It's no coincidence that real estate consistently ranks at the top of long-term investment choices among the wealthy. For middle-aged Americans, especially those focused on preserving wealth and building passive income for retirement, real estate is an opportunity you simply can't ignore. The first reason it's so favored: consistent cash flow from rentals. Whether it's an apartment, a townhouse, or a commercial office, owning rental property means earning income every month. And the best part, you don't need to manage it yourself. Property management services today are efficient and widely available, allowing you to enjoy the income without dealing with daily headaches. Second, real estate tends to increase in value over time. After the COVID-19 pandemic, many urban areas in the US saw property prices double. Why? Soaring demand and limited supply. With ongoing urbanization and population growth, rising property values are more of a trend than a fluke. Third, though often overlooked, are the tax benefits, especially depreciation. As a real estate investor, you could depreciate the property to reduce the taxable income from your rental profits. In some cases, savvy investors even use depreciation to offset taxes on other income streams, including salary. This is a quiet strategy the wealthy have been using for decades. And finally, there's leverage. With as little as 20% down, you can control 100% of the asset. If your tax advantages are strong enough, you might barely need to dip into your own pocket while the tenant pays down your mortgage. It's one of the rare situations where someone else helps build your wealth. In short, real estate isn't just a place to live. It's a smart financial engine. It earns, appreciates, and minimizes your tax burden all at once. For anyone in midlife planning for a secure, sustainable financial future, this is an asset you should seriously consider. Asset 3, bonds. When people think of building wealth, their minds usually go straight to stocks or real estate. But there's another asset, quieter, less flashy, yet incredibly effective: bonds. Especially for those in midlife who value stability and want to protect what they've already built, bonds are a smart and often overlooked choice. At their core, bonds are simple. You lend money to the government or a corporation, and in return, they pay you regular interest. There are three main types: government bonds, corporate bonds, and tax-free municipal bonds. Each offers a different balance of risk and return, but all play a vital role in a well-rounded long-term investment strategy. Government bonds are among the safest out there, backed by the U.S. federal government, making them ideal for preserving capital while still earning steady interest. Corporate bonds offer higher yields and are better suited for those comfortable with moderate risk. And municipal bonds? They're a hidden gem for high earners, as the interest is often exempt from federal, and sometimes even state, taxes. One of the core principles of wealth building is this: it's not just about how much you earn, it's about how much you keep. Bonds help you reduce your tax burden, letting more of your money work for you instead of being lost to unnecessary taxes. For anyone striving toward financial freedom, allocating a portion of your portfolio to bonds adds balance and stability. In times of market volatility, bonds act as a safety net, providing consistent cash flow while helping you weather financial storms. Ultimately, bonds aren't just a way to preserve value. They're a solid foundation for building sustainable wealth. If you're looking for a low-volatility investment that delivers predictable income and tax advantages, bonds absolutely deserve a place in your financial game plan. Asset 4. Stocks and real estate investment trusts. On the journey to financial freedom, owning a piece of the world's biggest companies is one of the fastest ways to build wealth. And today, investing in stocks has never been easier or more accessible. With just a few clicks on platforms like Robinhood, Fidelity, or Schwab, anyone could become a shareholder in giants like Apple, Amazon, or Microsoft. You don't need to pay high trading fees or even buy a full share. You can start with less than $100 thanks to fractional share investing. Stocks aren't just investment tools. They're a way for you to plug directly into the heartbeat of the economy. As companies grow and succeed, their stock prices rise, and you grow wealth alongside them. In fact, the top 20% of wealth holders in America own the majority of the stock market's value. The message is clear. If you want to build wealth, do what the wealthy do. Own income-generating assets instead of letting your money sit idle. Another powerful option, especially for those in midlife, is real estate investment trusts. These are companies that invest in income-producing real estate, like shopping centers, apartments, hospitals, and hotels, and are traded like stocks. Real estate investment trusts let you invest in real estate without the burden of managing properties. Many even pay high, regular dividends, giving you stable cash flow similar to owning property, but with higher liquidity. For anyone focused on personal finance, investing in stocks and real estate investment trusts is the bridge between small capital today and long-term financial goals. Not investing now means missing out on both wealth growth and compounding opportunities. Starting is easy, but the long-term impact on your financial future and even future generations can be profound. No matter where you are on your financial journey, stocks and real estate investment trusts remain some of the most flexible, intelligent, and effective tools for building lasting wealth. And remember, every single investment, no matter how small, is a step closer to the wealthy mindset you're working toward. Asset 5. Mutual funds, index funds, and ETFs. When it comes to financial investing, not everyone has the time or desire to analyze individual stocks or calculate performance ratios. For many in midlife who are focused on protecting wealth, maintaining steady income, and moving toward financial freedom, mutual funds, index funds, and ETFs offer a powerful solution. Think of these funds like ordering a pizza. If you're unsure which topping to choose, instead of picking just one, you get a slice of everything to make a combo pizza. That's how these funds work. They pool together many stocks or assets into a single investment basket, helping you spread risk while saving time and effort. Among them, ETFs are becoming a favorite thanks to their transparency, low fees, and stock-like tradability. You could buy ETFs directly on trading platforms, often with zero commission. Popular examples like SPY or VO, which track the S&P 500, let you invest in the broader U.S. stock market easily and safely. Mutual funds, while still a solid option, require a bit more caution. Watch out for hidden fees, management fees, transaction charges, or exit fees, which can quietly eat into your returns over time and reduce the overall effectiveness of your financial plan. For those approaching retirement, these funds offer a way to sustain long-term wealth without having to monitor the markets every day. In fact, many ETFs incorporate advanced strategies that generate steady income while still managing risk. A perfect fit for those who want results without the stress. The truth is, building wealth doesn't always mean doing everything yourself. Sometimes, choosing the right basket and letting experts manage it for you is the smartest way to get closer to your long-term financial goals while still enjoying your life along the way. Asset 6. Valuable commodities. In times of economic uncertainty, smart investors often turn to commodities as a way to preserve wealth and shield themselves from the effects of inflation or market turmoil. For those in midlife, pursuing financial freedom and lasting wealth, understanding the role of commodities in a portfolio is not just wise, it's essential. Commodities are tangible assets like gold, oil, precious metals, agricultural goods, or even alternative forms such as fine wine, art, and cryptocurrencies like Bitcoin. While most don't generate regular income, they have a unique strength: the ability to hold or increase their value over time, especially during periods of economic instability or rising inflation. Take gold, for example. For decades, it has served as a financial safe haven, maintaining its value even when fiat currencies decline. Meanwhile, oil and industrial metals often surge when global demand for production rises. Some investors even go a step further, choosing rare assets like vintage wines, collectible art, or classic cars, niche markets that have consistently demonstrated strong long-term appreciation. For many midlife investors managing their personal finances, holding a portion of commodities in their portfolio is a smart way to slow down the erosion of cash value while gaining the potential to profit as commodity prices rise. It's not just a defensive move, it's a strategic, long-term mindset rooted in a deep understanding of economic cycles. In short, as you work to build lasting wealth, don't overlook commodities. This often quiet asset class can be your shield against global market volatility, keeping your wealth grounded and protected through whatever storms the economy brings. Asset 7. Intellectual property. In today's world, where technology and ideas can generate billions, intellectual property, IP, has become one of the most powerful assets for building long-term wealth. Unlike physical assets, IP doesn't require land or factories. It's born from human creativity and knowledge. Intellectual property includes copyrights, trademarks, patents, and usage rights. You see it everywhere, in books, music, software, movie scripts, and other creative works. For example, hit songs continue to earn millions in royalties year after year. Iconic brands like Nike or Coca-Cola are worth tens of billions, not because of their physical products, but because of their protected names and images. For midlife individuals seeking to diversify income and reduce dependence on active work, IP offers a major advantage: passive income. When intellectual property is licensed or its usage rights are sold, the owner earns royalties or licensing fees, often regularly and for years. This is the dream of earning money while you sleep, and it's a cornerstone of financial freedom. Even better, you don't have to create IP yourself to benefit from it. Today, you can invest indirectly through funds that focus on music royalties, software rights, or patent portfolios. Tech giants like IBM, Apple, and Microsoft generate billions annually just from licensing their massive IP collections and strategic partnerships. In a market that increasingly values innovation and knowledge, intellectual property is the clearest symbol of modern wealth building. It proves that true value doesn't lie in what you physically own, but in what you create and legally control, whether directly or indirectly. Investing in IP is not just a smart way to protect wealth. It's a powerful strategy for building lasting financial security for you and future generations. Asset 8. Cryptocurrency. In recent years, cryptocurrency has become an unavoidable topic in the world of personal finance. Controversial as it may be, there's no denying its potential for high returns, alongside high risk. For midlife investors looking to diversify their portfolios and tap into the modern wave of financial technology, crypto may be a small but worthwhile consideration. Cryptocurrency goes far beyond just Bitcoin or Ethereum. There are thousands of digital assets out there. Some are integral to decentralized finance, DeFi, systems, and can generate income through staking, mining, or yield farming. But alongside legitimate projects are countless junk coins with no real value, where uninformed investors often lose money due to hype and a lack of understanding. While crypto isn't as stable as stocks or real estate, there have been periods where it has outperformed traditional asset classes by a significant margin. That's why many financial experts suggest allocating a small portion of your portfolio to crypto, focusing only on large-cap coins with strong technology and wide adoption. As blockchain technology evolves, more investment funds and financial institutions are entering the crypto space. This growing institutional interest signals that cryptocurrency is steadily moving toward mainstream acceptance. However, sustainable wealth isn't built on speculation. It requires a wealthy mindset, understanding the risks, seeking real utility, and avoiding short-term hype. Asset 9. Collectibles. When people think about investing, they usually picture stocks, real estate, or gold. But there's another asset class, one that blends art, emotion, and financial potential: collectibles. For those in midlife who've built a stable financial foundation and are looking for something both safe and exciting, collectibles offer a unique and rewarding path. Collectibles include timeless assets like fine art, luxury watches, classic cars, rare wines, designer handbags, and precious jewelry. These aren't just beautiful objects. They carry the potential to hold and even grow in value over time, especially as they become increasingly rare and sought after. Unlike stocks, which rise and fall with market headlines, collectibles tend to move independently of traditional financial markets. That makes them especially appealing during periods of economic uncertainty. In fact, many high-quality collectibles have outperformed major investment funds, particularly during times of inflation or geopolitical instability. But successful collecting isn't just about buying something expensive. It requires insight and expertise. Not every watch is appreciated. Not every bottle of wine becomes a treasure. To truly benefit, you need a wealthy mindset. Stay curious, study the niche, and make informed decisions without getting swept up in hype. One of the most powerful aspects of collectibles is their personal connection. You don't just own these items, you experience them. A rare painting on your wall, a luxury watch on your wrist. These aren't just investments. They're expressions of your journey, your taste, your success. It's where wealth building meets lifestyle, and that's something many midlife investors begin to value deeply. In the end, collectibles are more than a passion. They're a smart, strategic way to build lasting wealth. If you choose the right pieces at the right time, with a long-term vision, they can quietly become one of the most fulfilling and financially powerful assets in your portfolio. Asset 10. Business ownership. Look closely at the world's wealthiest individuals, and you'll notice one undeniable pattern. They build businesses. From global tech empires to franchise chains, it all starts with an idea nurtured into a machine that generates massive value. For those in midlife seeking a major financial turning point, owning or investing in a business may be the most powerful path to wealth creation. A business isn't just the product or service it sells. It's the brand, the loyal customer base, the intellectual property, the systems, the team. Each of these elements holds tangible value, contributes to the bottom line, and can be measured on a balance sheet. When a business is thriving, it not only generates steady cash flow, but also builds long-term value, exactly what legendary investors like Warren Buffett look for. Take McDonald's, for example. Known for burgers and fries, its real power lies in its massive real estate portfolio. It's a perfect illustration of how a business can house multiple asset types: property, patents, copyrights, branding within one structure. This kind of integration makes a business one of the most efficient vehicles for accumulating complex, scalable wealth, something no other single investment class can match. And when a business reaches scale, its potential multiplies. The owner can sell part of it, go public, or bring in investors, unlocking immense wealth without selling a single physical product. This is how companies like Tesla, Apple, and Nvidia transform from bold ideas into trillion-dollar assets. Building a business demands vision, persistence, and a wealthy mindset. But done right, it doesn't just create income, it creates a legacy. A business can become your most powerful tool for achieving true financial freedom, for yourself and for generations to come. Asset 11. Tax-advantaged accounts. On the path to financial freedom, it's not just about where you invest. It's also about how you invest. One of the most overlooked, yet incredibly powerful tools for building lasting wealth is the use of tax-advantaged accounts. In the U.S., accounts like 401(k), IRAs, HSAs, and defined benefit pension plans are designed to help you grow your investments with major tax benefits, either by deferring taxes or eliminating them altogether. This means your money can grow faster than it would in a regular taxable account. Take this example. If you invest $10,000 into a Roth IRA, and that money doubles every 7 years at an average 10% annual return, roughly the historical average of the S&P 500, in 28 years you could have over $160,000, and you wouldn't owe a single dollar in taxes when you withdraw. But if that same investment were in a taxable account, thousands could be lost to the IRS over time. That's exactly why so many wealthy individuals and financial advisors strongly recommend maximizing your contributions to these accounts. In fact, countless studies show that professionals like engineers, teachers, and accountants, many with moderate incomes, have quietly become millionaires simply by consistently investing in their 401(k)s over decades and allowing their returns to compound tax-free. Tax-advantage accounts aren't just savings tools. They're a smart financial strategy. They help you increase returns, avoid unnecessary tax erosion, and create a solid foundation for a worry-free retirement. In the bigger picture of wealth building, any investment, whether it's stocks, bonds, real estate, or ETFs, becomes significantly more powerful when it's sheltered inside a tax-advantaged account. So if you're serious about growing and protecting your wealth, these accounts shouldn't be an afterthought. They should be a cornerstone of your wealth mindset strategy. Asset 12. Your own knowledge and skills. Among all the assets you can own to build lasting wealth, none are more powerful, more resilient, or more consistently profitable than your own knowledge and skills. This is the one asset no one can take from you, that never depreciates, and that's always ready to generate value, if applied correctly. For those in midlife, investing in yourself is never too late. In fact, it might be the highest return investment you can make at this stage of life. One key difference between the wealthy and those still struggling financially is mindset. The wealthy never stop learning. They understand that every new skill, every piece of knowledge mastered, unlocks new opportunities. Sometimes, knowing just one thing others don't can make a difference worth thousands, or even millions, on your financial journey. The clearest example is mastery in a specific area. Real estate, the stock market, taxes, or technology. Deep knowledge in one of these fields can help you make smarter investment decisions, or even monetize your expertise through consulting, teaching, writing, digital content, or developing proprietary intellectual property. All of that value starts with having the right knowledge. Learning doesn't have to mean going back to school. Today, you can build skills through online courses, books, podcasts, or hands-on experience. The key is adopting a lifelong learning mindset, because markets, technology, and the financial world never stop evolving. If you want to protect your assets, improve your investment performance, or simply avoid costly mistakes, investing in your education is the smartest move you can make. Every skill you learn is a brick in the foundation of your financial freedom and peace of mind in retirement. In the end, always remember this. Your most valuable asset isn't in a bank or property portfolio. It's in your mind. Learn deeply, understand clearly, Act wisely. That's the formula for true, sustainable wealth. Wealth that not only grows with you, but can be passed down to the next generation. Thank you for taking the time to follow this content all the way to the end. It shows that you're truly serious about building lasting wealth and achieving financial freedom. I hope these insights on the 12 types of assets have given you a clearer, more practical perspective on how to manage your personal finances with confidence and intention. If you have any thoughts, questions, or personal experiences you'd like to share, don't hesitate to leave a comment below. We'd love to learn from you too. See you in the next valuable piece of content.